Hey, it's Dario and this is Coffee with the Markets, but without coffee this time, because I already shot this video, but the camera shut down because there was no battery anymore, so I have to redo the video again, but luckily for me, I didn't record much, just 6 minutes, but it's fine, it's fine. So today I would like to talk to you about the new tariffs for China, the Trump's tariff, the 10% raise, because they are going to affect the normal people this time, the people that go to buy shoes. Hey again, it's Dario and this is Divity Trading, a platform where we can share our best tips and tools when it comes to trading, investing or finance in general. And if you love the subject, please consider subscribing. So as I was saying, the tariffs for China by Donald Trump, actually by the US. But first, let's talk a little bit about the tariffs that we previously had, because we should mention that those old tariffs only affected the industrial goods. So the normal consumer, the normal people, didn't actually realize about the tariffs. Okay, they knew about the tariffs, of course, I'm not saying that, but I'm saying that on the prices of products, normal people didn't actually realize, didn't have to pay much more. But this time Trump is going to strike to those consumer goods, to those products that every day we buy. I don't buy them because I don't live in the US, but you get the point, okay? So we're talking about products like the iPhone, we're talking about shoes, clothing, and so on. So these products are actually going to cost 10% more from September 1st of this year. So yeah, there is that, and it's a very important raise because 10%, it's not a little number, especially on those products that everyday people buy. Like again, clothing, shoes, iPhones, and etc. Also, these tariffs didn't only affect the prices and will not only affect the prices of goods, they are also going to affect the stock market. Because what happens is that companies which are a little bit afraid of those raises in the tariffs, which are probably going to have, I think, less income, don't want to invest as much money as they used to. So the stock market doesn't like when companies don't invest money, and that translates to in the drop of the stock market. Now, I'm not saying there is going to be a recession, I'm not saying there's going to be a depression, but you get the point, okay? We are going to see drops in the stock market, and we have actually already seen a drop in the stock market because the S&P 500, I'm still watching the SPY ETF, dropped 3%. So there is that. And also about the stock market, the Fed tried to soften this increase in the tariffs and so this possible decline in the stock market by cutting the interest rates by 25 basic points. Did that help? Not that much, I would say, because again the prices dropped 3% on the S&P 500, and also the price of dollar, if you watch the US dollar index, increased. So actually the dollar becomes more expensive, and as you may know, when you cut the rates of interest rates, the value of the dollar is supposed to drop, to go down, and that's good for the US economy because they can export more, right? Because the dollar costs less. And so if the Federal Reserve cuts the rates and the price of the dollar goes up when it's supposed to go down, it's not a good situation, okay? It's not a good situation, and that is probably due to the fact that Trump is increasing the tariffs on many consumer goods products, and also because Powell said that this 25 basic points cut on the rates, it's not going to be one of the many that are going to come. So probably there are not going to be other cuts in the interest rates. And also take notice, this is the first cut in 10 years of the interest rates. But again, Powell said that this is not going to be the first of many because they don't believe there is going to be a recession. They think that the economy is strong and it's going bullish, so they don't need to cut the rates as much as if there was a recession. Yeah, I don't know about that. I don't think it's going to be a recession. I'm not saying that. I don't predict the future. What I want to say is that we should be careful, okay? We should be careful, and as investors, we don't want to predict the future. We want to take notice of what happened, what it's happening and act on those things we know and that we can prove. And by now we have the cuts of 25 basic points. We don't know exactly if there are going to be other cuts, and also we should take notice of these tariffs, of these new tariffs on consumer goods, especially those companies that are targeting normal people. Let's call these people that, okay? I am normal people, for example, the people who buy iPhones, for example, the people who buy shoes, the people who buy clothing. Those companies that are more directed to those people are going to struggle the most. Of course, Netflix, for example, it's not going to struggle as much because they are services, they don't rely on China. So be careful on those companies. I'm not saying they are going to fail, drop, or go bankrupt. Guys, I'm not that catastrophic. It's just a 10% tariffs, okay? We have seen many tariffs in the world, but we have to take notice. As investors, we need to be aware of what is happening and then act based on that knowledge. But now, as always, the stock of the week. And this week we have PaySign. The ticker is PAYS. This is a company that provides payment solutions for consumers, companies, and also government, okay? It's a good company. Actually, it's a great company. I really like the fundamentals. Unfortunately, they have just one core business. They just have these payment solutions, and also, unfortunately, they work just in the US. So, as I said in many videos now, I like companies when they have multiple products and they work in multiple countries. But of course, we cannot have the perfect company, and in this case we have a company that just has one product and works in one country. But to compensate, we have an awesome increase in revenues, an exponential increase in revenues, but on the other hand, the earnings don't follow that much the revenues, okay? They follow, they increase, but they don't follow as much. They are not exponentially growing as the revenues. And so that's to take into account. But still, it's a great company in my opinion. The liabilities are completely covered by the short-term assets. We should also mention that the liabilities are mainly composed by short-term liabilities, okay? On Simply Wall Street, I didn't see long-term liabilities, but that's fine because we don't have debt, okay? In those short-term liabilities, we don't have debt because there is no debt, the company doesn't have debt, the net worth is increasing, that's awesome, and also we don't have dividends, which is something that I again like, as I said in previous videos, as I said the last week. I know many people don't like companies that don't pay dividends, but as I said, I'm watching to growing companies. I want them to take their revenues, their earnings, and then reinvest those earnings in the company and grow even faster. So I don't need them to give me the dividend, I want them to grow, okay? On the technical side, we have a period of consolidation. The period of consolidation ended with a break on the upside, and now it's retracing. It might be a good opportunity to wait for a longer retracement, or it might also be a good opportunity to wait for the break of the newest tops. We should also mention that we have the prices on historical highs now, and we could wait for the break of those tops, of those real historical highs, okay? Let's call them that. And after the break, it might be a good opportunity to buy. Again, as always, I'm not saying you have to buy it, just have a look at it. This is my opinion. I don't give advice, so just have a look at it and tell me what you think in the comments down below. But hey, this was all for this week. Let me know in the comments what is your stock of the week. Let me know what you think about the tariffs for China. If you are from the US, let me know if you are worried about these tariffs. And yeah, I'll see you in the next video. Hey, it's Dario and this is Coffee with the Markets. And today I wanted to talk to you about Facebook because they released the earnings and actually they are pretty good. But now let's talk about why I think that Facebook might be the next Amazon, at least in terms of growth in the stock market. I think that because of